From briefly hitting new all-time highs, Bitcoin has now flash crashed by $10,000 in a matter of hours, wiping out over $1 billion in the markets. Now we're seeing a 14% correction. Is it over, or is this the opportunity that we've been waiting for, that dip that we can get into altcoins? I want to show you some signals for altcoins coming up now that we've seen a very brief all-time high for BTC. We're also going to look at Ethereum as it continues to show strength in the market. Of course, cover off the traditional markets as it is your home of macro cycle analysis. Hit that like button and share this with a friend today so they can see how these markets work. We're going for 400,000 in 2024. Thanks again for being on this journey with us throughout the bulls and the bear markets here on the channel. Links in the top of the video description for our free crypto and economic report that also has altcoin reviews now. Thanks to you guys. Hit that link in the top of the description. All right, let's kick it off with the liquidations again. It's heated up over the last 24 hours. Yesterday was pretty substantial on the shorts, and today, very, very big on the longs. 870 million in the last 24 hours and over 1 billion total. The shorts and the longs are getting liquidated. How this can happen is having your stops so close to the market, trying to do some degenerate shit by having very high leverage. Not talking about that in today's video, but that's how this happens, especially at extreme volatile periods like we're seeing in the markets right now. In terms of what we've seen over the last week, understanding the narratives going on, what we saw recently was there is no Bitcoin left. It's all drying up. There's all of 40 BTC left on exchanges, or in this case, OTC desks. And that should, in theory, logically, lead to massive God candles to the upside. But of course, these are narratives, and they happen to do this stuff at the extremes of any particular move. Posted this about it on Twitter yesterday, and also yesterday I just looked at all of the narratives that we've seen over the last few weeks as the market has gone up. Granted, yes, it has gone up, but you start to see these narratives become even more pronounced as the markets continue up, and sometimes at the peaks or very close to the peaks. All of the narratives come together to tell us why the price can never go down, and then we get a nice flash crash. This case, 14.5%, pretty substantial in such a short period of time. If we go into the hourly chart, you can see it happened over just a matter of hours. You got 2, 4, 5 hours there going from 69,000 down to 59,000. So how is this going to help us? We want to look at the support and resistance levels in the short term and long term to see whether this crash or this correction, healthy correction or flash crash, is sustainable for the long-term macro outlook and where those pivot points are going to be. So in the case here, just looking at Bitcoin on exchanges, finally, an analyst that says it how it is, argued that OTCs are not running out of Bitcoin. He believes the notion that an OTC desk could run out of Bitcoin seems far-fetched, primarily due to the opaque nature of how these desks operate and the complex web of transactions and addresses they use. But of course, who wants to hear this at the peaks? Who wants to hear it when everything is going crazy? Because all you want to hear about is how Bitcoin can keep going up, as opposed to listening to both sides. Not you guys, you understand how these markets are manipulated with headlines and how people just believe narratives at the drop of a dime. Now, onto the traditional markets, see how we're tracking over the last 24 hours. Fear and greed index dropped to greed from extreme greed. Yesterday, we were tracking in the high 70s, even briefly got into the 80s over the last couple of weeks, but we're now just sitting at 74 on the greed. Not too bad here for the S&P 500. It did have a down day of 0.8%. Remember, what we're looking out for here is just single-digit corrections to the downside as this bull market continues to grind away at the bears who remain on the sidelines, hoping for bigger corrections. Now, we've seen a total of 1.84% from the peak the day before. So that's the that's the current all-time high price at 51.57. Now tracking down at 50.87. What we're looking out for here is the strength of this move to the upside. This white line is the price and time movement compared to the previous time and price movement. Basically, this entire move up from the low to the peak, if it was to repeat exactly the same, we would have seen in, say, the sort of next 8 days, if this market made it back to 4,900, which is a very substantial drop of about 4.5%. If it made it back to that point there, then the move is exactly the same as the previous move. It got off to a much quicker start and then had a much more steep decline towards the end of the move. So there's still several days left to get to that point there at the end. As you can see here, it's about 8 or so trading days, 10 days total. Remember, there's weekends included in there as well. But essentially, we should see how that wraps up by next week. End of next week would give us a rough idea of where this market will sit. Is it going to be stronger or roughly the same, or potentially weaker? Weaker would mean we'd have to see a much bigger drop on the S&P 500. And I know some are still hoping and waiting for a very, very substantial correction. Now that correction might come, but right now the markets aren't showing signs that it needs to correct that far based on what we have looked at in history when it comes to grinding bull markets. They just continue up and continue grinding in the stock markets. Same sort of thing has happened here on the NASDAQ as well. We're almost at that exact point, coming up another couple of days now for this move. If the NASDAQ is to get back about 2%, up to about 18,400. That would be the exact move. It's pretty much roughly tracking almost exactly the same. So there's really no signs here that we're about to see some sort of substantial correction like we saw in 2022. So the market is still tracking along just as expected from the previous move to the upside. So still good things here going on for the traditional markets. For Bitcoin, as we talked about with the market sentiment. So we're looking at the fear and greed today. It hit 75. Yesterday was 90. Last week, 82. And with a drop of 15%, we've seen a 16% drop on the fear and greed index, going from 90 down to 75. So like you can see, when these markets get a little bit of a volatile move, a bit of a swift move one way or the other, you can see just how fragile they are in terms of market sentiment. So it's not like we're tracking back down at $40,000 from a high of 69,000. We're still at 63 with a drop down to 59, holding 60,000, a nice psychological number so far, yet it has hit the fear and greed index to a relative degree here, back down to 75, back into the zone where it was tracking on the way up. If we're to see more of these type of days in a row, I would dare say that this would absolutely wipe the sentiment out of the market and could be a good thing to reset it. Does it have to happen? Of course not. It doesn't have to be like that in order for the market to keep going up. We saw a couple of months back here in 2020 when Bitcoin first went into a new all-time high. It stayed around extreme greed for quite some time, about 2 months there. But this move to the downside that went from 90s down to 40 on the chart was literally just going from 40 down to $30,000, which was still in all-time high territory. So you can see the fragility of these markets as they start to creep into all-time high territory. People's emotions are ridiculous at these stages in the market. And quickly from that point, it jumped straight back up in February, back into the extreme greed, started to get a bit of a wearing here as the market was rolling over. That's another story for another day. What we want to look at now is the support and resistance levels for BTC on the short term, and we'll extend it out to the long term before we get onto some altcoins, looking at the corrections that they've seen in the past. I've got plenty to get through here. Like and subscribe. And if you are interested in being a TIA premium member, learning more about trading short term, more about investing long term, setting yourself up with financial freedom, check out the link in the top of the video description. Our traders are crushing it with these markets right now, hitting good longs, good shorts, great profits over there. This is all in the top of that video description. Join them, and we'll see you over there in TIA Premium. Otherwise, check out SwiftX, Bybit, and BitGet, channel sponsors here. All right, BTC and its move into new all-time high territory. What has happened in the past is nothing different to basically what's going on right now. What we can see from the previous cycle as Bitcoin pushed into new all-time high territory right here on the 30th of November, it took 16 days for Bitcoin to eventually overcome that all-time high. The 30th touched it only by a couple $100, similar to what's going on right now. The next day, again, just pushed a few bucks higher. Big correction there for the day anyway. I mean, it's 4.7%, but the feeling for that type of move, especially when you've just moved into all-time high territory with a 9% day top to bottom, can feel like the world is caving in. Then you had a few more days with lower highs forming and eventually lower lows here on the daily, but the main low was still intact here. Took a few more days, eventually was able to break out. So there's your 16 days. Once the new all-time high was hit, we had a correction lasting 16 days on the way back, and then eventually the breakout there, and it was a pretty substantial move. In terms of the previous cycle to that, so going back into 2017's bull market top, you got the breakout into new all-time highs on the 2nd of March 2017, basically a 7-year repeat, almost to the day, almost an exact 7-year repeat. That's pretty interesting. Hitting new fresh all-time highs, and the correction lasted essentially 55 days. I know it did go a couple of days higher here. You had the following day on the 3rd. You had this big shakeout day on the 10th of March. At the time, this was around China banning Bitcoin. Notice how that hasn't come up this year yet. Maybe we'll see it again. Maybe we won't. But this was China banning Bitcoin. Big washout. Market thought it was all over. It was never going to recover from that point. And of course, well, basically almost 2 months later, it was able to push past those previous highs, and then on its way, it went to a new all-time high, which had about 10 months, 9 to 10 months left in that bull market once it did overcome that top to get to its final top. Now, the correction at this point was 31%. I'm not using that peak, but if we did want to measure that peak, which is absolutely fine, it's not going to make too much difference, 33%. So somewhere in that low 30% after it hit a new all-time high, it corrected there. Going forward into the 2020-2021 cycle, the correction was about 12% from that all-time high to the swing bottom before it broke into a new all-time high again. For the overall move, the biggest move, or the biggest correction within this region was about 17%. Now, this missed the all-time high by a few dollars, I think a couple $100 there, but it still had about a 17% correction before this one came into play. But remember what we saw beforehand, there wasn't a lot of selling going on in 2020 after that COVID crash. It seemed like a lot of the selling had already taken place back in March of 2020. We are coming up to a 4-year anniversary, 4-year cycle of the COVID crash, the collapse that we saw at that point. It's almost to the day now. So it might be prudent to be a little bit aware of these anniversary days of these extreme events that have happened in time. Looking at 2020, extreme downside. In 2023, a 1-year anniversary. What do you remember happened in March? We saw a banking crisis. Well, really a non-crisis considering what the price action did after that. The same deal for the COVID crash. It was really the best buying opportunity that we could see basically for years. We've never seen a better buying opportunity from that point. Now in 2023, almost to the day again, we're on the 6th today. You can see from the 6th, this was about to roll over into this banking crisis, which happened on the charts on the 8th, 9th, and 10th. So keep these dates in mind as we go through over the next week. We've seen very significant world events happen throughout these periods in March. It's just about keeping them in mind because of what's happened in history, and it seems to occur quite often. Not every year, but it does seem to occur quite often that you'll see some significant events occur in March, causing extreme emotions in the market, which then causes extreme moves. If the trend is down, then we could expect extreme moves to the downside. If the trend is up, we can expect extreme moves to the upside. For now, the short-term trends are down. We've got the 1 hour down, move across to the 4 hour. We've got the lower lows forming here. We don't have a lower high yet, just higher highs. But what we wanted to see on the short term for the support and resistance is a break back and closing above at least 64,300, and ideally this swing bottom right here, which is at 65,100. And so if everything played out well, you'd definitely want to see a close above 65,200 for the short term. And so we would see a grind through at higher prices above key short-term resistance points, which would then mean we'd probably see higher prices sooner rather than later. That's all we're looking at here when it comes to the strength and weakness. But for now, provided we stay under this level here at 64,300, then we'd have to expect that we would come back to test this 60K level again, or at least somewhere close to this region. So it's still early days for these short-term signals. However, if they do happen to turn down from here, if this level is not overcome, if we can't get back above 64.3 and then 65.2, then you would expect that the market would want to come back and test these lows. The bears would take control and would come back to test the support prices again to see if we can find more demand coming in at these prices again. Because it would mean if we weren't able to overcome the 64.3 and the 65 too, it would mean that the demand is not there. Therefore, supply comes back in and comes back to test the next price. Those prices are psychologically $60,000. We can cover a couple of other numbers here at $59,200, but for easy remembering the prices here, $60,000. Now, if that gives way, we move back to the next time frame, looking at the daily here. So the daily, going back to the previous low, the ETF correction back at 38.5K, gives us a 50% level at $53,900. So another round number, call it 54,000. That's on the daily. These are all still healthy correction levels. And in terms of percentage moves, down to this 53.9 is only a 22% correction. Can you believe it? That's basically what Bitcoin has done the entire way up. So going from 69.3 to 53.9 would still be a healthy correction and nothing different to what Bitcoin has done the entire move up from the November 2022 low. If that gave way, what do we have next? Well, let's look at the entire range going all the way back to where the market broke out in September of 2023, almost a 6-month range here. That would take us to $47,000, basically where it failed on the ETF hype, the ETF announcement, and then crashed about 20-21%. That brings us to about $47,000, which also lines up with the previous monthly swing top. So there's some pretty good support levels going all the way back to that price point there, which would still be a healthy correction on a longer term time frame. And the consequences to that is that the market would take more time to consolidate and to reload before we would see all-time highs again. So provided it stays above in these higher price points, that would mean we'd see higher prices earlier. But if it was to break down, then it would take longer to consolidate and test higher prices. Now, if it was to break down from this particular zone here, I'm looking at $38,000 to roughly $48,000. That's game over. Game over from that point. If it breaks down past 48, sits in that zone for too long and continues from there to test lower prices, that would be game over. Left-hand translated cycle is in. You guys can basically say, show's over. It all happened way too soon and all the macro bulls were absolutely wrong. But until that happens, until it gets back to this level roughly where that previous monthly swing top was on the breakdown, which is also, for now, the 50% level, for now, that would mean we're still bullish up here, but if it was to break down from that level, that's when things get a little bit worrisome for everyone hoping for much higher prices. Now, from here, we just have to play it one day at a time. There's still no signs that we need to break down past these particular levels here at $47,000 and roughly $54,000. Still early days, and even if it was to come back to $47,000 from this, if this was the top at 69.3, that would give us a 32% correction. So similar to what we saw at the previous all-time high prices, like we saw back in, that's 2017. That was that correction that we're looking at on the chart going back into this zone here. That was about a 31 to 33% correction. So nothing too different to what's happened in the past already. Let's take a look at Ethereum and where that currently sits against Bitcoin value. It is still holding very good ground here at nearly 5.6 million Satoshis. Most have been wondering whether this is going to hold up and basically bring on the next major gains for any major altcoin. So far, it seems like it's doing the trick. It hasn't broken down past these support levels yet, if at all. And so while that remains at higher prices, continuing to attempt to put in higher closes, you got to say that this is trying to round that bottom. Only if we start to break down from these lows at about 5 million Satoshis would you say that this has failed. Ethereum is going to find lower BTC prices, giving more strength back to Bitcoin and the dominance of Bitcoin, and then eventually turning around from that point. But so far, I think even if it was to break down, it's so close to any sort of low, if this isn't the low here, but this could be, that it's probably not a bad opportunity when you look at your risk reward for plays coming up after BTC. Speaking of which, and a quick shout out to our traders again who've just posting their wins, got lucky this time, and the bottom of that dump, well done. Getting your profits on 500% there. And to other guys, again, smashing those profits. The link is in the top of the video description here, guys, TIA Premium. Let's get on with the altcoins now. So in terms of the signals and what happened in previous cycles around this new all-time high price, Solana, as an example here, saw 80% declines against the Bitcoin value just around that Bitcoin all-time high, the new all-time high. Remember, BTC, get the right chart here, also took a bit of time to hit a new all-time high, pulled back for a couple of weeks, like we saw here, 16 days, and then went on to power away from 20K quickly to 24K, and then 28K and 34 and so on. Then we look back to Solana. It was on a decline here for several weeks. This is a weekly chart. On a decline here, hitting a bottom, little bounce, and then continued down. It was down 77% against its Bitcoin value by the time Bitcoin had hit a new all-time high. Now this is where it gets really interesting across the board for many altcoins, which could be setting up in this position now for your 40Xs, 50Xs, whatever X you're looking for, and that secondary opportunity for altcoins. Now you can see it was down 77% at the new Bitcoin all-time high. The week later, as Bitcoin was pushing up higher, it went down 82%, 84%, 89%, and then finally started to turn around and come back to that similar price where Bitcoin was at the all-time high after about 4 or 5 weeks. And then it went on another major charge. Now, this move was amazing. It was about a 10x in terms of the price. It went from about 50 cents to $5, and against its Bitcoin value, it was about 660% gain. But the real gains came after Bitcoin went into a new all-time high. From that low to that top, phenomenal. Am I getting those numbers right? 10,000. I'm going to say 100,000. 10,000% return from those particular lows. But if you wanted to buy back in as it crossed over the previous price of where Bitcoin was at its all-time high, 5,000. You miss out on half. No one's going to get the exact bottom. No one's going to sell the exact top. And so even if you sort of look at something a little bit mid-range there, it's still thousands of a percent return. There's still potential gains out there like this. You've just got to continue to follow the charts and be patient, because this period, as Bitcoin crossed over a new all-time high, saw these cryptos continue down against Bitcoin's value. That's why it's so important to keep holding Bitcoin during these times. Matic, another example of the previous cycle, and I'm going to get into some this cycle as well. Hold your horses. Matic, just showing the point here where it had its peak there, 2019. It started to continue down. There is Bitcoin's all-time high in November 2020. It was down 80-odd percent, 85% by the time Bitcoin got to a new all-time high. Again, several more weeks, but that was the final flush out there, 90% down. And then you don't even want to know these gains. These things were mental for Matic. To this top here, from that bottom to the top, was 12,000%. So even more than Solana at that point. Now we come to cryptos of today. Injective. Injective has been up and down against its Bitcoin value. It's doing well against USD. Don't worry about that. We're just looking for these strong and weak altcoins at this stage. What did it do? Well, even in the last cycle, Injective went down 74% as Bitcoin was pushing into a new all-time high. Now, this is against its Bitcoin value. There's Injective as it's released on the market here in October 2020. Bitcoin hit a new all-time high. You can see there it was still down about 67% against BTC. And then it went on a charge against BTC while BTC was also going on a charge, which gives you even more gains in USD value. So don't worry about the price that it's in now against its US dollar. There are big gains to be had. So this did 750% against Bitcoin, while Bitcoin was doing 200%. So to think about that, you've got to multiply that and you'll see the dollar gains that it was doing through that period. It wasn't doing 750% dollar gains. It was doing, over 2,000% dollar gains in that particular period while Bitcoin was also going up. And that is the lower risk time to get into these altcoins. TIA, where does it sit now? Oh, before we get to TIA, let's have a look at what's happening right now for Injective. It is down about 47% from the high against BTC. Now into this zone here, if it happens to get there, remember no guarantees, the bottom here, roughly 80%, the top here, about 50%. So it doesn't seem like the worst opportunity to be getting into it somewhere around here. There's always a disclaimer. Link is always my disclaimer here. Link went on a massive run and then didn't do anything during the bull market. Keep that in mind looking at these altcoins. How do you know that was going to happen? Well, you don't at the time, but what you can do is look at the 50% level. The Link BTC valuation came right back down, potentially similar to what's happening with Injective. It hit 50% in May and then basically faded out. So it's unfortunate that, well, maybe you still got 3 times your money there, going from 3,000 or 30,000 to about 100,000 BTC value. So you're still getting something from the move when Bitcoin's also going up, but it's nothing like what the other altcoins were getting during that period. And then it hit 50% and died out from that point. Keep an eye on that in case Injective does something similar. You don't want to see it get rejected at 50% on the way up, but hopefully it consolidates in this zone. The narratives are strong enough, the marketing's strong enough, and it pushes back out to press into new all-time highs as well. But it seems like many of these altcoins are getting into this setup zone while Bitcoin is showing strength and their Bitcoin values are showing weakness. TIA, it is currently down about 53% from its highs. So let's put this back to the top here, 53%. If we got back down to these other swing bottoms here on the weekly chart, they're 71%. And to the bottom here, somewhere around there is about 83%, which on the daily was another swing bottom. Yep, there it is. It's above that particular zone before it went crazy. So what I'm looking at here is the weakness on altcoins against their Bitcoin value. While the spotlight is on Bitcoin, while it was just hitting a fresh all-time high, while it's having a bit of a pullback, altcoins aren't getting the same sort of love that Bitcoin is. TIA, in this case, Celestia, hit a fresh high in January and has been pulling back for the last 2 months. And what you can see from past examples, you can go through many, many, many different altcoins. They typically pull back about 50 to 80, sometimes 90% against their Bitcoin value around this time in the market when Bitcoin's going to a new all-time high, and then they take off 1-2 months later. Is this time going to be exactly the same? I would say no. Keep a lookout for this. It could be a longer period that they consolidate, because through here, they ran up a couple of months, June to August, so 13 weeks. But this time round, they've been running up for a very long time. You can see from these lows here in June, or we use the, Injective's case, it's gone up for ages. You got January into this peak here. That was nearly a year going up. So I don't expect it to be exactly the same like last time, but you could see similar types of percentage pullbacks. And then it's about the patience with the consolidation before they start to move again. In the case of TIA, you can see from these lows here from about November to the peak, that was about 75 days. And so far, this pullback has been about 50 days. So not exactly 100% yet, but it could happen probably in the next couple of months. So we're going to keep a lookout for this. Make sure you hit that like and subscribe button on the channel. There is plenty coming up in this market, especially as we've just seen our first significant correction for BTC, down 6.6%, the biggest that we've seen since that ETF crash or ETF correction back in January. Thanks again. I'll see you at the next video. Till then, take care and peace out.